Hello, this is Huskins, your Forex mentor. Welcome to the daily review of the June the 3rd and the preview of June 4th, your daily dose of events that shape the Forex markets. Oof, it had been an incredible amount of studying all different kinds of investment instruments over the last a month, perhaps, and I think I did all right in my exam. Let's see when the result comes out. I'd like to share with you a little thing which happened during the exam. And there was a person sitting in front of me who did not appear to know what he was doing. So he'd flip a coin and then he'd mark his true or false answers. And later on, what happened was towards the end of the exam, he started erasing those exams answers and remarking them. When the exam got over, I asked him, "What's up with this? Why were you remarking your exam?" He said, "Oh, I was tossing the coin and marking my exam, and then towards the end, I was rechecking my answers." Well, if you haven't guessed already, this was a joke, but I brought this up because that's how a lot of people trade their forex markets. They flip a coin and then they go up, and then once they are in the trade, they second guess themselves and move their stops around, move their take profits around. They don't have a trade plan. Let's not be those kind of people. Let's go in with a plan and trade our plan. Let's look at what our trade was. We had a 30 pip winner, bang on painless trade. These are the kind of trades which I love. And then for our ISM trade, we basically did not get in because we did not. The criteria of a trade did not set up. So we have one winner and we start the month with a bang. Now let's remember we have a cross currency webinar coming up on the 5th of June. I have so much of information I'd love to share with you. It's going to be an amazing one. Sit down tight for a hell lot of information and something you need to internalize and perhaps use to benefit your own trading career. Let's look at the different news from around the world. One thing I'd like to bring up is that China is ineffective at cooling down property prices. Now, why I bring up China so much in my presentation is that the recent boom we've had in commodities and the growth of the world has, through to a large extent, been fueled by China. Um, and I'm very much interested in seeing what happens in China and taking inferences from that and seeing what might happen with the rest of the world. So China's home price is up for the 12th straight month. Now, I told you in the past that the Chinese credit market is a bit dicey. That uh, It's similar to what I'd say happened in Dubai in 2007 2008, that the property prices went one way up, but there weren't a lot of people who were actually staying, and then there was a big crash. So uh, maybe something similar is brewing in China, but then the Chinese government is trying to uh, take certain measures in and curtail, unlimited amount of speculation into the real estate markets, and they've done a few things like raising interest rates and making it more difficult to invest directly into real estate. But in spite of all of that, the prices continue to rise, and that for the 12th straight month. Now, that is worrying because, uh, we do not know what China might do, and then what if it overshoots? This is very much typical with a currency which tries to peg itself with another currency, and it's not free floating, because um, all it can do is that it has no measure of what its monetary policy is. Why doesn't it have any control of what the monetary policy now? Uh, Again, in case you confuse of what monetary and what fiscal policy is, monetary is printing money and interest rates, and fiscal is raising taxes on your citizens. So basically, what monetary policy does not have any control of is that it is trying to peg itself with the USA. So that the yuan does not rise so much rapidly, which would hurt the um, the Chinese export economy. So that's what it's trying to do. But because it is trying to do, it needs to print perhaps as much amount of currency as much as its counterpart USA is doing. And that's the only way it can peg it, right? If um, It's a law of demand and supply. If it stops doing that, then the free market will take over, and it will raise the price of yuan. So what's happening is that because of excess of money being printed in USA, China is doing the same thing. So which is causing a lot of inflation. In USA, we've not had that kind of inflation because the market had been cooled off for such a long time, and they're trying to reignite the market. But the Chinese market was heated up all along, and now they want to cool the Chinese market a little bit in terms of inflation and speculation in property prices, and they are unable to do that. So that's a tussle which a central bank always has when it tries to dictate policy rather than let the free market take over the policy. Now, uh, I'd like to share with you another article which I read, and which says, warning, prepare for commodity supercycle end. Basically, it calls for a downhill of all commodity currencies. Basically, last year, Columbia University's professor argued that there have been three complete super cycles between 30 and 40 years. The first peaking in 1917, the second in 1951, and the third in 1973. Now, what he says is that we are in the midst of the fourth cycle, and which began at the start of the century and is driven primarily by the industrialization of China. Now, it's not clear how long this cycle is going to be. Overall, he found that these super cycles have between 15 and 20 years of real rapid pace expansion. We've had about 10 years of the expansion in China since 2000, and we have had maybe 5 more years to go if this cycle fits the pattern of the previous ones. So basically, the article tries to suggest that it might be an end for uh, uh, super cycle sorry, for commodity currencies such as the Australian dollar, New Zealand dollar, and the Canadian dollar. I respectfully disagree with that. I do not believe that we are in a end of a super cycle, but I wanted to present two different sides of the board. I feel that commodities are the true money, and uh, you know we've not had lull in population explosion. So population is yet growing, and it's yet growing rapidly. We need to clothe people. We need to feed people. We need commodities if we want to continue to grow or even live. There are uh, places which are new, which are opening up. Something even like China, it has such a huge way of going to catch up with the level of civilization and uh, um, of commercialization which the Western countries do. Something like India. So we do need a lot of commodities, and I don't see commodity pricing easing. All of this comes into play when I call it the after effects of a little downturn. Uh, these same economists do not predict anything in the in the future, but what they say is after the Australian dollar goes down maybe 2-3%, they come up with this kind of reasoning. uh, I've already spoken to you all about my predictions in gold. We're going exactly in that direction. I've spoken to you about my Dow predictions and also on my USD JPY predictions. We'll have a look at that in just a little bit. Okay, so as I promised, here you go. We I told you that we are looking for another push down in gold, and really hoping that it comes up to the 1200ish level, and I'd make a sweet buy from there, but it's not, and I'm coming closer and closer to buy into this downturn in gold. It might not be a bad idea. Um, the reason is that we had such a nice rundown in gold. It went up, it came down and failed to break these lows. Okay, so it might be that we'd have another run up in gold, but I was really hoping, and um, you know, I haven't left those hopes yet that gold will fall down even further so that I can take advantage of that. But in case it doesn't, I'll be prepared to go long from here, and I will be prepared that this particular low may not hold. Now, um, I'll tell you my trading strategy when I do place my order. My Dow was that we'd continue to make new highs, and that's exactly what we've done. We're consolidating now, but this is just a little uh, gimmicky in the sense that uh, you know when um, when we have a nice run up, we definitely going to have a little bit fall down. People resting, people taking the profits off the table, and then, in my opinion, we do have room to go towards the upside. So that's about it for looking back. Let's see what do we have looking forward. Now let's see. We have our Australian cash rate statement. We've basically That's going to be in a couple of hours from now, and we also have a continuation trade based on apart from the original spike trade, and then the next trade will be on June the 6th, the CPI. This has been such a wonderful trade. All right. So we I talk to you again tomorrow. Till then, uh, thank you so much, and thank you so much for your wishes. I have so much of information to share with you about my learnings in preparation for the exam which I gave, and I'll subsequently share that all with you. Thank you so much. Have a wonderful day. Bye for now.